of intense negotiations and considerable resistance from some House Republicans, but ultimately garnered enough support to pass. Efforts to persuade holdout members extended into the early hours, highlighting the political maneuvering involved. Supporters argue that the bill will stimulate economic growth and simplify the tax code for many Americans. Conversely, critics have raised concerns about its potential impact on various sectors and the national debt. The president had set a self-imposed July 4th deadline for the bill's passage, adding urgency to the legislative process. This landmark legislation is expected to have far-reaching implications for the American economy and its citizens. Massive fireworks explosion in Pacoima destroys homes, injures people and pets. A significant blast at a fireworks warehouse in Pacoima, California, has led to widespread destruction and multiple casualties. A powerful explosion originating from a fireworks warehouse in Pacoima, California, has caused extensive damage to the surrounding area. The blast resulted in the complete destruction of multiple residential homes, leaving many residents displaced. Several individuals sustained injuries in the incident, with one woman reported to be in critical condition. The impact of the explosion also affected pets in the vicinity, with reports of animals being injured. Emergency services, including firefighters, were immediately dispatched to the scene and are actively battling fires that erupted at 3 residential properties. Authorities have launched a thorough investigation to determine the exact cause of the catastrophic event. The Bureau of Alcohol, Tobacco, Firearms and Explosives is involved in the ongoing inquiry. Initial reports indicated that 7 workers were missing following the explosion, raising concerns about their safety and well-being.
Boyfriend and friend of rapper Mellow Bucks, among 4 killed in River North shooting. 4 individuals were killed and 14 injured in a mass shooting incident outside a downtown Chicago Cargo Lounge. A tragic mass shooting unfolded in the River North area of Chicago.
Né? Quando ficou todo rosa, né?
Trump administration reportedly plans order to open retirement accounts to private markets. A potential executive order. Trump administration reportedly plans order to open retirement accounts to private markets. A potential executive order aims to allow 401 investments into private equity and other alternative assets, impacting retirement savings. Reports indicate that the Trump administration is considering an executive order aimed at allowing investments from 401 retirement accounts into private markets. This proposed change would represent a significant shift in how millions of Americans can allocate their retirement savings. Currently, 401 plans primarily invest in publicly traded stocks, bonds, and mutual funds. Opening these accounts to private equity, venture capital, and other alternative assets could offer new avenues for growth, potentially yielding higher returns. However, such investments often come with increased risks, including illiquidity and less transparency compared to public markets. Proponents argue it could unlock capital for private businesses and provide diversification benefits for savers. Critics, conversely, express concerns about the complexity and potential for fraud or mismanagement in less regulated private markets. The move could reshape the landscape of retirement planning and investment strategies across the nation. This policy initiative would require careful consideration of its long-term implications for individual investors and the broader financial system.
United States retail sales experienced sharp decline in May. Consumer spending falls by the most in 2 years, with tariffs identified as a significant contributing factor. Retail sales across the United States experienced a significant downturn in May, marking the largest decline observed in 2 years. This sharp reduction in consumer spending indicates a notable shift in household purchasing behavior. The government reported that overall retail sales, without adjusting for inflation, decreased by 0.9% from the previous month. This broad decline was influenced by various sectors, with automotive dealers seeing a substantial 3.9% drop in sales. Additionally, spending at gasoline stations fell by 2%, primarily due to a decrease in energy prices during that period. When sales from automotive and gasoline sectors are excluded, The decline in retail sales was a more modest 0.1%, still indicating a general slowdown. This trend suggests that tariffs are beginning to have a noticeable impact on consumer confidence and spending habits. The overall reduction in retail activity could signal a cautious outlook among consumers regarding the economic future.
Tariff-related inflationary pressures emerge in United States consumer prices. June consumer prices show the largest increase in 5 months, with economists attributing part of the rise to new tariffs. Economists are observing the anticipated emergence of inflationary pressures in the United States, directly linked to the implementation of new tariffs. Consumer prices in the nation experienced their most significant increase in 5 months during June. This uptick in the cost of goods and services is a direct consequence of higher expenses for various products, which are being passed on to consumers. The imposition of tariffs on imported goods raises their cost, and businesses often adjust their pricing to reflect these increased expenses. This trend suggests that trade policies are now visibly impacting the everyday purchasing power of American households. The Federal Reserve and other economic bodies will be closely monitoring these developments as they assess the broader economic landscape. Such inflationary trends can influence decisions regarding interest rates and other monetary tools. Consumers may continue to see price adjustments in the coming months if these tariff-related pressures persist.
United States trade deficit expands significantly in May. Exports decline more than imports, leading to a notable increase in the goods and services trade imbalance. The trade deficit for goods and services in the United States saw a substantial increase in May of 2025. The imbalance grew from $60.3 billion in April to $71.5 billion in May, marking a notable widening of the gap. This expansion was primarily driven by a more pronounced decrease in exports compared to imports during the month. Specifically, the deficit in goods alone surged by $11.2 billion, reaching $97.5 billion. Conversely, the surplus in services, which typically helps offset the goods deficit, experienced a slight reduction of $0.1 billion, settling at $26 billion. The overall trend indicates that the nation is importing more than it is exporting, which can have implications for domestic industries and employment. This widening deficit suggests ongoing challenges in global trade dynamics and the competitiveness of American products and services abroad. Policymakers will likely scrutinize these figures closely as they consider future trade strategies.
United States economy shows mixed signals amidst gradual softening. Recent data indicates a slowdown in economic growth and a stable labor market influencing Federal Reserve decisions. The United States economy experienced a more significant slowdown than initially anticipated during the first quarter of the year. Real gross domestic product, a key measure of economic output, saw a decrease of 0.5% on an annualized basis after final revisions were completed. Consumer spending, a vital component of economic activity, rose by a modest 0.5%, indicating a cautious approach by households. Private investment, however, showed a substantial surge, increasing by 23.8%, largely influenced by a rise in inventories ahead of anticipated tariff implementations. Government spending, particularly at the federal level, contributed negatively to growth, declining by 0.6%. Net exports also acted as a drag on the economy, reducing overall growth by 4.6% due to a significant increase in imports. Despite these signs of softening, the labor market continues to show resilience, though with some underlying weaknesses. The Federal Reserve, in response to these mixed signals, has maintained its current interest rate, signaling a cautious approach to monetary policy.
United States dollar index declines, Treasury yields lower, following economic data. The United States dollar index experienced a slip from its recent highs, while Treasury yields also moved downward in response to the latest economic data releases. In the financial markets today, the United States dollar index, a measure of the dollar's value against a basket of major currencies, saw a notable decline from its recent peak, approaching the 98.5 level. This movement occurred in the wake of new economic data, which also influenced the bond market. Concurrently, Treasury yields, which reflect the return investors get on government bonds, moved lower. These shifts indicate market reactions to the latest economic indicators, suggesting that investors are adjusting their expectations regarding inflation and future interest rate policies. A weaker dollar can make United States exports more competitive, but can also increase the cost of imports. Lower Treasury yields can signal investor demand for safer assets or revised expectations for economic growth and inflation. These movements are closely watched by economists and investors as they provide insights into the broader economic sentiment and potential future monetary policy adjustments.
United States House advances procedural vote on cryptocurrency legislation. The House of Representatives is poised to move forward with a procedural vote on cryptocurrency legislation following an earlier blockage. In a significant development for the digital asset sector, the United States House of Representatives is reportedly set to proceed with a procedural vote aimed at advancing new cryptocurrency legislation. This move comes after an initial attempt to push the bill forward was blocked just yesterday. The renewed effort signals a growing focus within Congress on establishing a regulatory framework for the rapidly evolving cryptocurrency market. Lawmakers are grappling with how to balance innovation in digital finance with the need for consumer protection and financial stability. The passage of such legislation could have profound implications for the adoption and operation of cryptocurrencies within the United States. It would provide much-needed clarity for businesses and investors operating in this space. The outcome of this vote will be closely watched by the financial technology industry and market participants. This legislative progress reflects the increasing mainstream recognition of digital currencies and the necessity for clear governmental oversight.
United States equity markets show resilience as major banks report strong earnings. Despite some market weakness, the overall performance of United States equities, particularly in the technology sector, and robust bank earnings underscore the economy's underlying strength. United States equity futures began the day trading near their highs, reflecting a generally positive sentiment in the financial markets. While some sectors experienced weakness, particularly outside of technology, the broader market demonstrated resilience. A significant factor contributing to this positive outlook has been the strong earnings reports from major banks across the nation. These financial institutions have consistently posted solid results, providing a clear indication of the underlying health and stability of the American economy. Management commentary from these banks frequently emphasizes the robust nature of the United States economic environment, even amidst various global challenges. Investors are closely watching these earnings reports as key indicators of economic vitality. The continued strength in the financial sector provides a foundation for broader economic confidence.
Federal Reserve Chair Powell maintains course amidst presidential criticism. Despite escalating attacks from President Trump, Federal Reserve Chairman Jerome Powell indicates no change in the central bank's monetary policy direction. Federal Reserve Chairman Jerome Powell is reportedly holding firm on the central bank's current monetary policy, even as he faces increasing criticism from President Donald Trump. The president has been vocal in his desire for the Federal